Alright, YouTube, Stocks by the Numbers, welcome back. Wanted to do a quick update video here about a company that got some decent attention back in the day. I know some people were bullish on it. We saw a little bit of a rally. Overall, we are down, but let's check it out here. A little how'd I do, let's review. We're talking about Luminar Technologies. Luminar Technologies. I don't know, I'm slurring today. Ticker symbol LAZR, listed here on the NASDAQ. Stock right now closed at $4.18, up 6 cents, about 1.5% here on the day, down 1 cent here after hours, as we can see. And right back here, early February here, February 7th, as you see, stock was about $7+ right here, this big red candle. And that is when I made the video, so it was about 8 months ago. And of course, just looking at the numbers, this company, again, is autonomous vehicles. They're doing sensors for a lot of these autonomous EVs, and of course, their LAZR technology. So down the road, of course, this is what I mean. So years from now, the company could really turn out to be doing some nice revenue and could turn out to be a nice grower for us. But again, over at $7, I basically said it was a little extreme. The company's bringing in like $10 million a year, $10 million a quarter. And at the time, I think the market cap was like $3 billion or something, right? So, of course, it was just a little extreme. And immediately after I made the video, we dropped back down into the 5s. Then we had a random explosion up above 10. And this is what I mean when I talk about these fake pumps, right? So if anyone was in right after I made the video and you held on for a few weeks and you happened to catch the pump, listen, congratulations, more power to you. I'm very happy that you saw a spike after I said it was going down, and hopefully you got out and made yourself a couple of bucks, right? I hope everyone makes a couple of dollars, whether you agree with me or not. I'm just giving my opinion here when I look at a situation. But again, what bothers me is it's when these pumps aren't justified, right? And this is what sucks if you were a longer-term shareholder, right? So if you got in at a higher price, $12, $15 a share, you saw this big rally and you were like, oh man, if it keeps going, I might be able to, break even or potentially even finally get into profits with this thing. And then what happened? It immediately gave it right back and dropped back down to 5.5 again. So that's why, again, these nice random rallies are nice, but of course it's not really justified and it's not real, quote unquote. Right? Because if it was real, it would, gave back a little bit and then try to like flatten out and get back up to that level. But as you see, it immediately dropped all the way back down, 50% from those highs and gave it right back. Then we have a rally back up into 8, okay? And then, of course, we fall off a cliff. Now we're at 4. And throughout this whole time, as we see, we sold off after I made the video. We come out here. The company misses on the top and bottom lines. Yet somehow the stock went higher. That's what I mean. So the stock was already overvalued, then they missed earnings. So it should have immediately went lower. Instead, it popped higher. We come over here. As you see, at least this quarter, they beat on revenue, right? So even though I might feel it was overvalued, to give it a little bit of momentum here for a couple of weeks after these earnings, it's more understandable because at least the company is showing, hey, we just beat earnings by, over 20% on the revenue side. We're growing. We're looking good. Okay, fair enough. Then, of course, you can see it begins to pull back going into this earnings report, and the company beats on the top and bottom lines. What happens, though? Stock drops on the beat. And this is what I'm talking about. This is why I personally stay away from companies like this until they completely crater down to lows and bottoms, and that's when you want to get in. You want to pay a good fair price per share for what you're investing into. And that's why I always look at the revenue to market cap comparison, because if this company is bringing in $40 or $50 million for the year, they're not worth $2 or $3 billion. I really don't care what anyone tells me. And looking at it like that, again, it may be considered a very simplistic approach, and I can appreciate that. But again, at the end of the day, a lot of these companies that I mentioned were overvalued, did continue to sell off after I've made my videos and said that they need to come back down to earth. If you go back and check out a lot of these other, newer, smaller meme stocks, especially like all this stuff, that's what I mean. Is it good for a random pop? Yeah. But again, you're not exactly sure when this pop is going to happen. So you're just kind of like rolling the dice, just hoping that you got in at a decent price and it explodes to a higher price and you can see a nice return. And again, taking this here on this rally from 7 to 10, listen, that's phenomenal. And I really hope a lot of people made money. But overall, I knew it was going to come down. Now, I know I'm bashing the company a little bit, but again, to me, it seemed very, very logical that this stock was going to go lower, not higher. And of course, it made a fool out of me for a little bit, but overall, as you see, I made the video at 7, now it's at 4, right? So, kind of saved you 40%. But overall now, we're looking at a market cap of 1.6 billion still. And that's why, again, I feel like this stock is going to go lower before it goes higher. If we look at the revenue coming in, right, a little below 10, 12.7, 11.1, 14.5, and now 16.2, you can see the revenue is actually slowly growing quarter over quarter. So the company's definitely on the right track. The problem is they were too high to begin with. So that's why, regardless of kind of what happens, this is what I talk about. When these companies are too high, they can beat earnings and they can go down anyway just because they're too high. And that's exactly what we saw last quarter here. The one thing I will say is that estimates came in at, I'm pretty sure, the highest they ever were here, north of 16 million. And the company actually came in and beat those estimates, which in my opinion is a really, really good sign. So I feel, like this situation here, where they beat on the revenue, but they still missed on the EPS, like I would have kept it flat or continued to sell it off. Instead, they brought it up. And that's the problem, because now you have a situation like this comes out, and here they beat on the top and bottom line, so the stock should go up. But the problem is they brought it up for no reason, so now they got to bring it down on a good reason. And that's what I'm talking about. That's why I'm talking about picking your spots, and even now still, forcing your way in here at 418. Why would I buy it at 418 when I could potentially get it for 318 or, 278 or something, significantly lower than where it is right now? And connecting these two bottoms here, it looks like we're kind of almost in a wedge here going into these earnings. And that's why I feel like this isn't exactly a descending triangle, right? Because it technically has to be a straight line. But in my opinion, I do think it's going to bounce off of this and start to drop down here and stay in this wedge right about at November. And then it could potentially start to rise out of the wedge because that's when earnings are coming in Wednesday, November 8th on the company. So that's why I feel like they're going to continue to bring it down and sell it off. And then maybe like that week or a couple of days before earnings, that's when they're going to rally it to try to run it out of the wedge. And then, of course, if the company beats, they might, have continued momentum and it could rally all the way back up into the 4s and the 5s. So again, this is why I say you really got to pick your spots. You really got to do your research. But look at the estimate, 19.595 million, right? Now, again, that's the most on record to my knowledge. And it's back-to-back from this last quarter that they just beat, coming in above those high estimates. So that's why I'm saying, with the technicals lining up here, coming in this downward trend, and then these estimates being as high as they are, if they do come in and beat on top and bottom lines again, you should definitely see a pop, even if I feel that the stock is still overvalued in numbers down here at $3 or whatever. Again, the technicals lining up with the fundamentals, it should technically have a pop out. But of course, they need to beat estimates, right? So if the company comes in inconsistent again, and here they post like 15 million or something, they're going to absolutely destroy the stock. I'm going to tell you that much right now. Probably bring it down to the 2s and whatnot. It could be, 50+% lower than where it's currently trading. Because again, they brought in $40 million for the year last year. So even if you want to do 10 times total revenue, that's a market cap of 400 million. And the stock is currently sitting at 1.6 billion. So that's why I'm saying it could definitely get really ugly if they come in with a miss here on this revenue. But again, they recently had a high estimate and they came in and they beat. So, we could potentially be a little bullish on this stock. I just think, again, you could get it in the 3s instead of the 4s. We still have some time, right? You got about 3 weeks before earnings, so no reason to force your way in. I will say this, though. This time last year, as we see here, this time last November for this quarter, they came in and they beat on the top and bottom lines with over a 40% surprise on the revenue side. Look at that, coming in 12.78 on only 9.1 million. So that's why, again, we could really have something nice setting up for us. We just have to remain patient. And if we can get in at a good price down here, a nice cheap mid to low threes at least, and then catch that U-turn along with the big revenue coming in, I really do think we can see a really nice return, right? Think about it. If you get in here at this fib at 310, and then it does what I say and it gets back up here, I mean, that's going to be a 50% return. It's all going to happen, you know, within potentially maybe a couple of days or a week or so before earnings. So, you know, this may be something you want to throw on the watch list and come back and check it out in a week or two and see if, you know, they brought it down and it's still in this wedge and we could potentially have a big play here. Because now, just like we looked at in the original video back here in February, now if we look at the revenue forecast, as you see down here, 16 million. Yeah, see, the estimates were 7 figures, then we just started to get into 8 figures, and the company again missed one, they hit one, and then boom, now they come in and they beat on that high estimate. And now look at next quarter, over 19.5 million. So that's why if they have to beat again to maintain their value or their hype, their allure, so to speak. So it's definitely up to the company now. But look at that moving forward now, 34 million for the quarter after that. And then going into 2024, 41.6 million, 53.5 million. This is why I was saying the company is ready to really start rocking and rolling and bringing the revenue in, but they have been inconsistent in the past. Basically, what do we got here? 5 beats, 3 misses on the revenue side. And of course, the bleeding is just ridiculous consistently for the most part. They missed on the EPS 5 times out of 8, right? So we got like an inverse relationship here happening with the profitability to revenue comparison. But there's growing numbers here in the estimates. If the company could actually come in line or potentially beat these revenue expectations, then we're talking about something completely different. And that's what I try to explain to you guys here when we look at these newer companies. They have to prove themselves first before you should reward them and buy shares of their stock. They have to come back down to earth. And again, I know a lot of people may be involved in this, and you know, you might not want to hear this. You only want to hear bullish stuff. But again, you know, look at this. We pull up the chart going back several years here, and you can see we had the ridiculous explosion, and then we have been selling off. This was what? December of 20. We're in October of 23. So for almost 3 straight years, from exploding at the high off the open, the stock has been in a downtrend for almost 36 straight months. And that's why I try to tell you, don't always worry about the FOMO and, you know, you need to own it because it's in the EV space or anything like that. Like I always say, take what the market gives you. Don't force your way in. You know, look for the valued trades. Switching over here to stock charts, we'll check out the daily real quick. As you see, since about last quarter, when they reported earnings, the stock has been below the mid-Bollinger Band. As we see here coming out after earnings, we had the rejection on the mid-Bollinger Band and then the break on the 50 and 200 day, and we have been rejecting multiple times on the mid-Bollinger Band, and that's why I feel, in my opinion, it may go lower before it goes higher. I understand the RSI really dropped down to the bottom here, and we've kind of been, looks like, in a slow rally here over the last several weeks, even though the stock really hasn't moved much. But again, on the daily, you see the MACD kind of rising from the depths there. So it may remain kind of stable for a little bit, but I have a feeling, I really do, that we really should go lower before we go higher. And again, you know, I may be missing something in the technicals, and it could pop like 10% tomorrow, back up to 450, 460, and I could immediately be wrong. But again, I do feel that minus, a day or two having a pop, I do feel that if we come back to the stock within a couple of weeks, I will end up being correct here. I have pretty decent conviction on that. Looking at the RSI here on the weekly, it's still slightly above 33.5. And of course, we could say we potentially flattened out. However, we have hit 30 and even sub 30 at other points. So that's why I feel we could potentially chunk down a little bit more before we begin that U-turn. And of course, the MACD was rising, look at this, for quite some time. And now it kind of crossed and started to sell off and pull back here basically since August. So that's why right now, overall, it actually looks more weak than strong in my opinion. But again, hey, we do have a big quarter coming up. So if this actually works out, again, the way we think it will, and if it drops like a point from where it is now, it goes to the low threes, and that's when everyone could kind of start stepping in and buying like maybe some longer term calls to try to catch some big pop here, or even stepping in buying shares down at 310, 320, right? That's what I mean. If this all goes according to plan here coming out of this quarter in November, then you can potentially see, a quick 40, 50% return. And even though I may have missed a rally in the past, again, it wasn't justified. So to be honest, I really wouldn't have seen it coming. If I did happen to step into LAZR here and it exploded, I would honestly just consider myself blessed, because I would know that in the numbers it's not justified and it really happened for no reason, especially coming off a big miss like that, right? So just to compare it to today we had a really good green day, and I had a feeling that would happen starting the week off, very positively. They would want to keep the markets green because, we were down, Friday, and we've been kind of volatile. And again, this is a perfect example. I mentioned almost looks like the stock is bull flagging here for some reason. And this is what I mean, a situation like this, seeing a Charles Schwab, which I called out puts on in the Discord. And this company, again, up over 4.5% today. And if we look, yeah, listen, it was close. It might not have been a big miss, but at the end of the day, they missed expectations. And all you heard about today was, financials crush it across the board. And, that's what I mean. They'll just try to look for whatever could try to justify what they're doing that day. Right? That's what I'm trying to get you guys to understand, right? So markets were volatile and selling off last week. If you were in the Discord, you definitely made a couple of bucks if you followed my calls. Whenever I would call out, puts on the NASDAQ or the Dow, they ended up being right, like 9 out of 10 times whenever I would lay them out for the last week or two. So that's why we kind of know we're in like a weak selling off market, right? But again, because we did sell off and chunk down with so much volatility to end last week, they have to try to find some footing and some stability this week, maybe for Monday, Tuesday, before they start to chunk the markets down Wednesday, Thursday, Friday again, right? Because we can't just be down every day. So that's why a situation like this, again, it might seem crazy, it might seem like a small miss, but in my opinion, I would bet against Schwab, because at the end of the day, regardless of what they're showing me here in the technicals or whatever, it really should be down. It should not be up over 4.5%. And again, if this trend line is true and they really do bring it back up to like 55.5 here before rejecting it, I mean, if I think it should go lower here at 53.72, I definitely think it should go lower up here at 55.5. So that's why I always talk about buying time, just in case something like that does happen. And if you do happen to step in on a situation like that with some time, then, if it does have that rally and you're immediately wrong, you still have time, and that's when you can obviously average down or even double down and buy some more puts even further out. But basically, I've seen this all before, and it's the fake rallies and the fake pumps that end up giving them right back almost, and becoming really good candidates for shorts and puts. And that's why anytime I see a situation like that where they'll pump a stock on a miss, I'm usually ready to let everyone know in the Discord that in my opinion I would buy puts here. And we saw the same thing with Disney. Disney came out, right? They missed earnings, I think. And I remember calling out in the Discord, oh, Disney's up like 2-3%, but it should be down like 3 or 4%. I would buy puts. And the markets were raging that day, and Disney was slowly climbing that day. I remember, I think it got up like 5+%. A lot of people were getting upset. And I remember saying, I don't care what they're showing me. I know what I know, and Disney should be lower. It should not be higher. I don't care what anyone says. And, then I think it was like the next 4 or 5 days straight after that fake pop, Disney was chunking down every day no matter what, and then hit new 52-week lows. And that's what I'm talking about. This is why I always say, I know what I know, and we have these sayings, right? Men lie, women lie, numbers don't lie, and that's what I mean. That's why, again, I know I kind of went off on a tangent here. I'm talking about Schwab and Disney when we were talking about a small cap, autonomous EV LiDAR company. But again, sometimes, situations, parallel each other, and you have to understand, what happened last time, what should be happening, what the numbers are showing you, because again, you can't just look at, oh, the stock has high short interest, so I should buy it, it's going to pop soon. Or, oh, the RSI is starting to drop down, so that's it, now it's oversold, I'm buying it. You can't just look at some random indicator like that to try to justify your position. That's why I always say you really have to take a step back and try to understand the bigger, broader picture sometimes of what you're looking at, and that may help you make better decisions. But to end back on LAZR, again, we have a potential descending triangle, kind of, sort of, and I feel, in my opinion, we will break and drop into the low 3s, potentially high 2s, and then we could maybe even do an update, like right around Halloween there, the end of October, first day of November, and I can come back and do an update, and we can see if we were right. Again, I can try to just revisit it real quick and potentially just kind of throw it back into your mind so that you can keep it there in the front of your mind as something to watch and potentially play for that next week or a couple of days or whatever. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. A thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel if you have not yet. Really helps me out. I will do we'll go back. I'll do let's review videos. I'll do update videos. I'll talk about brand name stocks and blue chip companies and break them down here, in my opinion. And of course, I'll make call outs in the Discord link in the description of every video. And I'll do all of that for you guys. Just do me a favor. Push the subscribe button. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for stopping by, and I'll see you guys in the next one.